How much pain can you take? Sure, you've watched my video on the stock-to-flow hypothesis and you looked up co-integration on Wikipedia just to make sure you understood the claims about the model. You're pretty sure Bitcoin is going to the moon eventually. But whatever you know and eventually don't help you when you buy a bunch of Bitcoin and it immediately declines 40%. Your spouse is not going to be happy. Like a misbehaving child, they refer to it as your Bitcoin. They're getting nervous. You can explain it all so well in your head, but you know it is wiser just to shut up and silently recite the mantra, number go up. Every single Bitcoiner has experienced a less than ideally timed purchase. In fact, almost anyone who has been into Bitcoin for long enough has experienced buying and then watching the price drop. It's such a joke that people post on Twitter, "I'm about to go buy some Bitcoin, everyone, get ready," to watch the price drop. How can you avoid this situation? Well, one easy way is to dollar cost average. This means that you always have plenty of purchasing in the future. So if the price goes down, that's good news for you. You'll be getting more Bitcoin next week and the week after and the week after that and so on, until it goes back up, which it will eventually. But let's suppose you have a larger amount of capital to deploy in a lump sum fashion. Maybe you sold some other investments, having decided you would like to own some Bitcoin instead. That's a good decision because Bitcoin will outperform just about any other type of asset you could own. But that doesn't mean you should buy it now. Lower your time preference, bucko. Basically, never be in a rush to buy. You want to wait. Buy when the price is good. How do you know when the price is good? The Mayer multiple. What is the Mayer multiple? Because Bitcoin has a price history, there are a number of metrics and indicators that we can apply to it the same way we do with traditional investments such as stocks, bonds, commodities, and other tradable financial instruments. Example metrics would include the various trailing averages such as the 10, 20, 50, and 100 and 200-day moving averages. The trailing averages are used to smooth out a time series with a lot of volatility or up and down movement. They can help you spot trends and changes in trends. Bitcoin, however, has a number of metrics that are sort of special to Bitcoin. One in particular is the Mayer multiple, so named by Preston Pysh in 2017 in honor of the well-known Bitcoin OG Trace Mayer, who first posted observations regarding the ratio of the current price to the 200-day moving average, which he was using to calculate when to buy and sell. The Mayer multiple tells us where the current price is compared to where it has been over the last 200 days. This 200-day moving average is a little over half a year long. Over Bitcoin's history, the Mayer multiple has averaged around 1.4. According to backtesting, it has made sense to accumulate, that is to buy Bitcoin, anywhere up to a 2.4 ratio. At or above 2.4, it has been advisable to stop buying and wait for prices to pull back a bit or for the average to catch up. The lower the Mayer multiple is, the safer it is to buy. Safer in the sense of you're less likely to experience a pullback after buying and having to wait weeks or months for an underwater position to get back above water. Whether these numbers will hold in the future or not remains to be seen. The Mayer multiple should be treated as one of several useful tools in choosing when to buy or sell, but not necessarily as a buy or sell indicator in its own right. Bitcoin moves in roughly a 4-year cycle. During the cycles, Bitcoin periodically experiences short-term parabolic moves due to increased buying pressure and inelastic supply. Just 10 days out of any given year account for almost all of the upside for Bitcoin in that year. These rallies run out of steam and the price either pulls back while staying in a bull market or we enter a bear market until the start of the next 4-year cycle. For more on this, you might want to see Bob Lucas's videos on YouTube entitled Bitcoin's 4-Year Cycle. You can also get a great overview of Bitcoin cycles by reviewing the charts on lookintoBitcoin.com. The 200-day moving average covers a little over 1/8 of a 4-year cycle. Perhaps you've seen one of these charts on the psychology of market cycles. You can see what a full market cycle looks like from a psychological perspective. The Mayer multiple seems to capture some of the information about where we are in this cycle. If you are dollar cost averaging, purchasing every week or every period, the Mayer multiple will have two purposes for you. First, you may consider pausing your DCA buying when the Mayer multiple passes 2.4, as there is little or no benefit for you to buy above this level. It will almost certainly be cheaper soon. Resume when it is back under 2.4. However, if there's a chance that you won't start buying again when the price comes down, then maybe just leave your weekly buy order in place. If you have held your Bitcoin position for nearly a full market cycle and have seen more than 10x gains, the Mayer multiple will help you identify a pretty good, but not necessarily perfect, time to convert some Bitcoin back to fiat. It's unlikely that you would call a perfect top. You can, however, sell 10, 20, or 50% of your position at a significant profit within maybe 10 or 20% of the true top and be very happy. Why wouldn't you want to sell all of your Bitcoin at this time? Well, you may want to hold your Bitcoin through another complete market cycle or longer. Why not buy more Bitcoin back at a lower price? Well, there is a risk that the past does not repeat. You may not get an opportunity to buy back in at a lower price, or you may end up using your sale proceeds and find yourself without enough cash to reestablish your position when the window to re-enter the trade is open again. You may only have a few months to do whatever you're going to do with the cash and then have a good chunk ready again. Only you can know your situation well enough to know that this is a game that you can play. For most, it will actually be easier for you to hang on to your core position if you have taken out your initial investment and then some. You may wish to buy a house, pay off a mortgage, pay for something important, or make another kind of investment. Your spouse will not bother you about your Bitcoin being down if you at least sold enough to turn that into tangible, lasting progress in the material or financial well-being. Just think of it as the price of keeping the rest of your position. You'll probably need to sell at least 10 or 20% to do this, so plan on it. Do not sell your whole position with a plan to buy back lower. If you're not a professional, full-time trader, you're likely to screw it up and end up with much less Bitcoin, especially if this is your first market cycle. Sell only enough to enjoy a healthy return, hodl the rest. The Mayer multiple has a slightly different use if you're purchasing a lump sum of Bitcoin. If we make a lump sum purchase today, the Mayer multiple tells us how long and how intensely we may regret our purchase. Even if you purchase at the worst possible time during a parabolic cycle top, aka buying the top, if you are willing to wait 2 to 3 years, you will see a gain. But for many who do so, that 2 to 3 years will entail persistent feelings of pain, embarrassment, regret, and anguish. From cycle top to the bottom, Bitcoin has sold off around 80 or 90% 3 times. Such misery, however, is only possible for the worst possible lump sum purchase timing. If you're caught up in the fear of missing out or FOMO, please, please, please check the Mayer multiple first. Never rush to buy. Aside from 4-year cycle tops, there are other bad times to buy Bitcoin, but the period of anguish or regret may only last for 2 or 3 months. These are the 10, 25%, and even 40% pullbacks that we regularly see during a bull market. Most people can handle a few weeks of being down 20 or 30%. If you can't handle 90 days of seeing your newly acquired Bitcoin underwater, then you're probably putting too much of your wealth into Bitcoin, or you're not ready for Bitcoin. This is what people mean when they say Bitcoin is too volatile. They mean Bitcoin is too volatile for me because I can't stand to see a paper loss for 90 days. This is the price you pay for 100x gains. If you can't get one, this is the price you pay for 100x gains. You can't get one without the other. If you don't have the stomach for this yet, you are better off dollar cost averaging through smaller weekly purchases. I have purchased lump sums at less than ideal time, so I know the feeling. Checking the Mayer multiple can save you trouble. If the Mayer multiple is high, it's very likely that we will see a pullback after our purchase, and we may need 30, 60, or 90 days to see our Bitcoin position turn from an unrealized loss into an unrealized gain. If the multiple is low, it is much less likely that we would see a significant dip after purchasing. Just as the Mayer multiple can help you make smarter buying decisions, it can also offer guidance when selling. If we see the Mayer multiple climbing over 3 or even 4.0, we are likely experiencing a parabolic move driven by new market participants, also known as fools about to lose money. Those people are buying the top. Yes, you may totally be excused for taking their money from them as long as they are not your friends. In this case, if it is your plan to sell any Bitcoin within the current 4-year cycle, you should move to do so swiftly. Your selling window to obtain something close to the best price may only be open for days or weeks. It takes time to move your Bitcoin onto an exchange, to refamiliarize yourself with the process of selling, to think through the tax implications, to make sure the cash lands in your bank account as expected. You may be dealing with amounts of money many times your annual income and way outside of your normal experience. It will be stressful. It will require your full attention. So, if we're starting to heat up, you may want to make a small sale or two just to practice, so you know what you will do when the emotions are running wild and you need to execute your selling plan with cool composure. Use the Mayer multiple to help you understand where we are in the market cycle and to help you keep your head and avoid costly or painful mistakes when buying or selling Bitcoin in lump sums.